What in the world is going on, David, with silver?
Well, for someone that's been in this market for so very, very long, it's not all that surprising. I mean, I coined the phrase, silver will scare you out or wear you out. I mean, there's periods, almost 20 years where after the 1980 peak and then a subsequent high price, really, it went to 50 and the average price in 1980 was $21 per ounce. And then it drifted down to $5 and it stayed around the $5 level for almost 20 years. And, that's a long time to wear you out. I don't think there are too many people thinking about silver for that 2-decade period. But the point I'm making is that it'll scare you out. In other words, it can make these very, very big moves very, very quickly and exceed the expectations of the most ardent bull at times, only to do what it just did on this open, which means we went from, I think, 84 in the access market. And then by the time it got to the New York market, it had already dropped like $10 or something. We're still doing this recording as that day's trading has really got several hours to go. So who knows where it's going to close at today.
Yes.
So I'm really not that surprised. I think silver's kind of gotten ahead of itself. We've had these massive moves up, and it's only natural really for any market, silver included, that you will see, a back and forth at some point. And I've warned everybody, once this bull market starts again, that the primary purpose of a bull market is to shake off as many investors as possible all the way up, so that whenever this market peaks, there won't be too many that rode that bull the whole time. And I am fairly certain we have not seen the ultimate peak in silver yet. There are many that are advocating that's the case. And, you should take all of your silver profits and move it into Bitcoin and all kinds of stuff's out there on the web. I don't pay attention to too much of that, but I have to in a way because I get so many questions from, the general public, but primarily my membership. David, is this true? Is this false? Is this real? What's happening? Blah, 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 blah. And there's so much misjus and skewed information out there that's very difficult to keep up with it all. As far as separating the wheat from the chaff, I'll say prided myself, but I've done my level-headed human best to stay steady on the tiller, take the strong course, the even way, and not get too emotional, because as things move like this, the emotions come out. Surprisingly, a lot of my members that are more conservative, meaning, they don't really use leverage, they are in for the long haul, their expectations are realistic. Several of them have gone in and asked me about options tradings and what kind of, spreads would I use. I mean, a lot of them have, not a lot, but more than I've ever seen before, are asking, what's a good way to leverage these silver investments. And to me, that was an indicator that we're going to get a pullback and we're going to get one, fairly quickly. And here we are.
You raise a really important point. It makes me think, should we be viewing silver the way we view gold, in the sense that, at least for myself, right, I have a long-term vision of holding gold. I'm not trading gold. I'm not in and out of gold. So when people come to you and say, well, should I be taking some profits from silver now and allocating it to, whatever, I guess the question is, should I not get too greedy when it comes to silver price?
I think, obviously it's a personal choice, but moving on the thread you outlined, Danielle, that's a very good one. I mean, gold is, pretty established. The central banks buy gold. They've been doing it rapidly the last couple of years. That trend continues. And it really is the monetary stability, whereas silver as a partially monetary metal is much more volatile, much more emotional, sort of looking at the Dow Jones versus the NASDAQ. I mean, if you remember, in the tech wreck, I think the Dow went down 20, 30%, if I recall, but the NASDAQ went down something like 80%. So that's a good analogy for the gold and silver markets. So I think your core position, especially the older you get, should be gold. As far as silver is concerned, I think you should treat it as more volatile and act appropriately. So let me just outline what I've done for many years, and that is my core position is like 75%, and with 25%, I trade around that, trying to catch, not day trades. I blow myself up doing day trades, but position trading I'm pretty good at. And that is where you take, a breakout at 50 and just hold on to it until it exhausts. In other words, you keep moving your stop up as the market moves in the direction that you thought it would. So that's something you can do. It does enforce the idea of taking a profit. Now, I've got a core position that I'm not going to sell until I think, we've gotten there. And just to add on to that a bit, it's very difficult to measure where do I sell my silver, where do I sell my gold, because I'd say 90% or more of the population, regardless of nationalities, looking at how many yen is it worth, how many Canadian dollars, how many US dollars.
Yeah, right.
And that is the absolute incorrect way to look at it. What you need to do is look at it in how many barrels of oil, how much real estate, how much in the stock market. That's what you want to know. And silver and gold are very underpriced versus the stock market. So let me go on just a minute longer. If you were in the Weimar Republic during a true hyperinflationary blow-off, a hyperinflationary depression, the stock market went up and up and up and up. So people thought, oh, I'm doing good. I don't have my money in the bank, at least I'm in the stock market. And it protected them somewhat. But if you did the gold stock ratio, what you would find was gold and silver were the only thing that kept you above the inflation rate. Stocks did not. So from that, we could say perhaps that we could see a blow off in the stock market going up and up and up. And people feel good because, the dollar is declining or gold and silver are moving quickly and they're okay because the stock market keeps going higher. But relative to gold, that's what we want to look at. Where is it? And that, again, is what you really need to measure. That keeps you grounded. That keeps you in a basis of the real value versus what is the paper price. Not saying that when you cash out, you don't get, fiat in exchange for it. I understand that. But it's what is the ratio? Is my silver overvalued in real estate? If it is, well, maybe I should take a look at selling silver for real estate. Is it overvalued to stocks? If it is, maybe I should consider selling silver or gold for stocks. Okay. And that's really, in my mind, the only way to get grounded and look at it objectively. Otherwise, you're just looking at a number that can be printed to infinity. I mean, honestly, all fiats can go to infinity. Look at Zimbabwe, you look at the Weimar Republic, you look at what happened. Can't name them all, but in my book, The Silver Manifesto, I think we had 8 of them in like the last 20 years, and that book's like 10 years old. So, I mean, this is not something that's a one-off and once every 100 years. It happens fairly often.
And that's so well said. And that kind of brings up the next point, because I'm sure you got bombarded with, well, if you don't think this is the all-time high, David, is it triple-digit silver? Is it in the thousands? And we see all these, people throwing out random numbers. But is there a way, what calculations could we get to a realistic number? What can we look at that could really make us think, okay, silver could realistically be headed to whatever, 120, 150, whatever it is?
Yeah, I think the only way to do that is one of the factors that is not used by too many. I think if you look at the better analysts in my peer group, and there's several, and they're very good thinkers, and they really know their stuff. And shout out to all of them. I could name them, but I'll leave somebody out and they'll be upset with me. But it's really the gold-silver ratio. And so right now we just got under 60 briefly. We're probably well above that now with today's sell-off.
Yeah.
But I think as a minimum, you'd want to see a gold-silver ratio at 50. And at that point, maybe that's all it's got this time. I don't know. In a major secular bull market, you usually do better than the best you've already seen. And the best we've already seen is somewhere between 31 and 33, depending on whose data you take. So I'll call it 31. So I think that at that point, I'd really take a hard look at, is this all it's got? But silver tends to outperform gold at the end. And I don't think we're at the end.